The stock market is behaving extra erratically. Volatility is actually not at historic lows, and we have seen actual significant declines in some of the biggest stocks. The question everyone is asking is, are stocks over or undervalued? You came here for the truth, so let me unveil that for you. Today we're going to look at the stock market. We're going to look at various economic indicators. Let's begin. This is the Facebook stock, and you can see what has happened over the past few days, dropping to levels not seen for the past several months. So all of those gains that have been attained over the past few months have been erased in short order. You can see Mark Zuckerberg's wealth has declined significantly in this short period of time. Now, I don't know how updated the Bloomberg Billionaire Index is, but regardless, we can see it has come down along with the Facebook stock. On the other hand, Jeff Bezos has seen his year-to-date increase of $33 billion worth, and that is no doubt massive. Then we're going to look at the QQQ, and this basically to sort of forward ahead to show you the top holdings of the QQQ ETF, and that is Apple, Amazon, Microsoft, Facebook, Alphabet, and so on. Okay, so you get the picture. Taking a look at this, we can see where it has gone since not really where the arrow that they're pointing at here, but this, March 2009. It has simply skyrocketed ever since. When you take the top tech stocks, look at their performance compared to, let's just say, the S&P 500 or the Dow Jones, or even a grouping of funds, of the biggest funds out there. The select few tech stocks have outperformed most everything else, especially with the amount of money that we're talking about here. And I've covered it so many times before, and there's no hiding this, that central banks print money, they're buying up these tech stocks, the ones that are part of the QQQ, and ultimately have been pushing them further and further up. You look at what has happened with the institutional investors, whether it's Berkshire Hathaway or other companies, they're following suit, and you have the retail investors simply following along. Now, taking a look at this, valuations of FANG type stocks are reaching extremes. So while we'll take the dot-com boom and bust, you can see where the price to book ratio was at the very tip. And today, S&P Internet Services and retailers, whether that's Facebook, Amazon, Netflix, or Google, your FANG stocks, hitting the same level. And that's not normal. That's not a good sign. They may say that today is different and today internet is more important and things like this, but it should never get to this level when we need something real supporting it. There's no problem with tech stocks being very big, have a lot of money, a lot of investment, a lot of basically, let's call it media attention and everything else. That's fine. Obviously, these companies, they're making great products maybe, and a lot of people are buying them and everything else. That's good, okay? That's going to create jobs, hopefully, and that's going to get the economy going by creating products and services that people like and they want to work at these companies and so on. But it's not good if there's not a foundation underneath it. And that somehow is really not being addressed here at this time. Now, the price to sales ratio. So price to book and now price to sales, looking at it from March 2009, just going into the astronomical levels again, dot-com boom and bust level. Way surpassing what was experienced during the financial crisis. But don't worry, this time is different. This time is different, and this time is different. At this time, in which phase of the economic cycle would you say the global economy is? And Bank of America Merrill Lynch has really outlined this here in terms of this study that they did, or this poll. A lot of people now, especially throughout 2018 are starting to suggest that this is part of the late cycle. Mid-cycle are considering this to be less and less likely. Whether that means anything, we'll have to see. It's just really taking a look at it and judging what people say. The overall sentiment tends to be most accurate the minute before that. For example, with the Federal Reserve, they say they're going to raise interest rates. It's like 5 minutes beforehand they say, oh, everybody's all in agreement. Okay, they're going to increase, they're not going to increase rates. Before that happens, it's anybody's guess. What do you consider the biggest tail risk? And you can see that obviously the trade issues being very, very hot on people's minds right now. Inflation, another problem, slowdown in global growth, and so on. The Fed ECB policy mistake, of course, what that means is that they will increase rates, seems to be less of a priority these days. Evolution of global FMS top tail risk. Fund manager surveys, right? All right, trade, big issue right now. This is as of March 2018. Inflation and bonds crashing was last month and the month before. But it's trade. Trade is the talk of the town today. And you'll see these right here. Fed and the ECB increasing rates being a big issue. And I do believe that that should be taken into consideration. And of course, it's generally not until it's too late. What do you think is currently the most crowded trade? Long FANG. The #1 most overcrowded trade by far. Look at where this goes. No doubt. Shorting volatility, not really an issue anymore. And so on. You could see that for yourself. Well, just very quickly, see the evolution right here at the top. That's March. Wasn't as much of an issue in February as it was March. You'll see that there. And look at this. I mean, just the FANG stocks in particular. But look how many times we're seeing long NASDAQ right here. And essentially what we're doing is betting on tech, right? Long dollar, US dollar as well. These are overcrowded trades. We're talking about when everyone's moving in the same direction, you need to start looking elsewhere. And that might be a short-term thing that you would do to trade, or maybe a long-term. Maybe there's a new long-term trend developing. People need to understand that. You can't always just hold on for dear life. There's different reasons why you want to understand the cycles that economies go through. More evidence that it's very hard to beat the market over time. 95% of finance professionals can't do it. When you take your money to a financial professional, all right, a financial quote-unquote experts, they will actually fail 95% of the time. If you just invested in a simple index fund. That's it. 95%. So the chances of them being able to do it are not exactly likely. I wouldn't want to risk anything on these individuals claiming to be quote-unquote experts. You need to take the matters into your own hands. You may decide to invest in, some mutual funds, or maybe you want to get to an RRSP and so on. That's fine, but you got to know what you're doing, and you got to know what those individuals are investing in. You don't just take what they say to be reality. And so, I'll leave it at that. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I do appreciate that very much. And last but not least, if you found this video informative, I know that you will find my books, The Money GPS and my new release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, there's a look inside feature, and that will allow you to flip through the pages of these books to see if you like them. Take care. I wanted to take this moment just to thank so many people I want to start by thanking everybody who supports this channel by giving me a thumbs up. All the new subscribers, all the old subscribers, heading towards 100,000, hopefully, if everything goes well. And I also want to thank everybody that comments, because that is going to be able to support the channel in one way, shape, or form. We want to get discussions going. I like to reply to as many people as I possibly can. It's difficult, of course, because sometimes I'll spend half an hour and I've only gone through the comments from the last 4 or even 6 hours. That's how many comments are coming in. It's great. It's amazing. I'm so happy about that. I also want to thank everybody who supports me financially. Okay, even though I don't get to say it enough, I want to thank everybody that's supporting me every single month through Patreon. Thank you very much. I want to thank all those who support me through crypto. I always thank somebody when they donate to me in one way. And with crypto, I can't even do that, but I would like to just make a blanket statement. Thank you all. And also those who have donated to me through PayPal and others. So that's all. I just wanted to extend my thank you to you. Take care.